Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Friday, February 6th, 2009. Well guys, another rally on Wall Street today as the market's racing up. Now, the key here is the jobs data this morning. We really got a little bit of a bump on the futures pre-market at 8:30 a.m. Eastern Time when that data came out. And once the market opened, you saw buyers step in. Now, a lot of it had to do with some other factors, we believe. And I'm going to go over that because, let's be honest, that jobs number is not pretty. Almost 600,000 jobs lost last month in the month of January, over 1 million in the last 2 months. And what that's telling you is things are not good out there. But that doesn't matter. Why? Well, because it's not just that. First of all, you have a stimulus package being hammered out right now. The market believes this jobs data is going to push people and push the government to action and get this thing done. In addition, you have Obama working on a bad bank plan with Geithner. Geithner will be releasing that on Monday. And you put all this kind of stimulus and government action together, and the market's running up into anticipation. Okay, so it's a classic case of buy the bad news. A lot of people would have thought a number like this on the jobs would be a downfall and the markets might pull back. That's not happening, okay? So keep that in mind, folks. It's not as clear-cut as it seems. The question now becomes, do we see a pullback after we get this plan from Geithner on Monday? Is it a sell the news type event? That's up in the air. We'll discuss that in the premium service video tonight from the Research Center. By the way, folks, we have a webinar Saturday, this coming Saturday, 1 p.m. to 6 p.m. Go sign up under Education, Webinars, and Seminars on our website. We're going to cover all the hardcore technicals that you ever wanted to know. You'll walk away from that webinar with your eyes wide open and much, much more profitable in your swing trading, your day trading, your investing, whatever it may be. Okay, so again, sign up for that. It's this Saturday, folks, so get it today while you can. Now, a couple things, guys. You guys are looking at my levels here on the SPY. Now, we're coming into support. There is support right here, and you can see what happened today. The market rallied up this morning right at the open, really gapped up a little bit and never looked back. It was a good old-fashioned gap and go. And what we call gap and go is when the market gaps up and just continues to run. All right, and that's exactly what happened here. You have a small gap up and a hard push, and then the market's never looked back, really. Now, there is a couple things I'm seeing here, folks. Number one, you are finding some resistance up here. I'll show you that on the 60-minute why this is resistance up here. There are a couple areas, and it's holding the market down right now. But you are getting a decent amount of consolidation. I mean, it's basically a push, pause all day long. And look at that. From really the opening candle, if you just take that over here and draw that across, you can see that line, and then the high really put in right on the third candle, the 10 o'clock candle, it really held up almost identically as the highs. And you can see from here over, you're really just hovering in this range, in this upper range. You can't quite break out above this level, but these are your levels right now. You have resistance here on the 10-minute chart, right here at approximately, 86.50 or so on the SPY. Downside supports the 20 moving average right here, and that will be changing as it adjusts, but you're looking at around 86.30. If that breaks, then you're looking to go down to this sloped angle right here. And right now, that'll be continuing to move up, so just be aware of that. Every 10-minute candle, that'll extend a little higher. Right now, it's currently around 86. Alright, so those are your levels on the downside. We'll watch to see if we break up during this video or down, but those are your near-term levels. Then obviously you have these below it, stretching all the way back and vice versa, all these. Now, I'm going to go into the 60-minute chart here as well. I want to give you guys a good example, and this is why you're running into resistance right here. Alright, notice this level, this gap right here, where you gapped up from this point to this point. Take that lower level right there and draw it right across. It matches right here. Alright, and right across, and that's exactly where we're hovering. In addition, what we had talked about in the Research Center is if we do break up in this market, we were going to go right to this 200 moving average in green. And you can see that's exactly where we are currently trading. Now, believe it or not, this movement right here is somewhat of a bullish consolidation move. So we'll have to keep a close eye on that. It could turn it out to be a bearish one, though, depending on the shape of it. If we start to uptick slowly, then that all of a sudden becomes a little bearish, as we would have an in spirit of bearish flag pattern formation off of a big move up. Alright? Ultimately, on the upside, on the 60-minute, if you were to break up hard, you'd probably look at this level right around here, which would be about 88 on the SPY, which would coincide with this upper range. Anywhere between this level here, really, this level and this level right here would be a very heavy resistance level coming into play on the 60-minute chart. Okay. Now, a couple other odds and ends, guys, I want to discuss. Number one, Goldman this morning, the financials, Bank of America. Bank of America, guys, and this is a nice one because Bank of America up $1.30 today, and yesterday I added it, and a couple of the traders that on the Pro Trader watch list, which we put out as our premium, it's included in the research center. It went out as an alert to be on watch. Yesterday it was on there as of yesterday morning's open, and look at that, guys. From there to there, you're talking about basically from $4 back to over $6 from that bullish watch list post. All right, and that's why it's so imperative that you have that service. If you're a swing trader, you could have been right on top of that, buying it down there in the low 4s or high 3s and just riding it up, or a day trader or an investor, whatever it may be. Now, it probably will be. We'll have to see if it's going to be removed or do we see more upside, but, you know, it's a monster move. You're basically talking about 50% return in 2 days. Enough said, you know. So, Bank of America, huge move today, folks. A lot of our customers and our premium subscribers, I know, played the options on that as well, buying the 5s and the 6s and the 7s yesterday when we were at around 4, and what a profit on those, probably a couple 100% on the options as well. Goldman Sachs has had a monstrous move lately, guys, and I want to just show you this. This is one of the best calls that we had recently on Goldman support. We talked about this Goldman gap up over here, and we said, guys, watch for the necktie support right here to be a pullback, fill the gap. Look at the gap fill coming into play as well. So this is a good reason. This is a great chart to teach off of because the gap filled. It was right into a necktie. That's a bullish situation. And right when you get that, that has to be known as a buy on Goldman Sachs. All right, so again, just notice what happened here. You gapped up, then you filled the gap, and it was right to a necktie. You see the 200 moving average and the 50 moving average right there. That's a buy. Look at the chart after that. You went from basically $75 here, $77, to all the way back to a high right now trading in the 95 range on Goldman Sachs. That's huge. I mean, think about the percentage. $75 to $95 percentage-wise on Goldman Sachs, no less. All right. Now, a couple other odds and ends I want to talk about. We obviously put out an alert today on a couple different things on the blog. I hope you guys are keeping up to date on our blog, on our website. You can also use that RSS. We have the RSS, so you'll get notified if anything gets put up there using that RSS. But what I am seeing right now is the market's actually beginning to uptick here, folks. So let's go back to the SPY and just touch base. And look at this. You're starting to break up. I'm not sold on this breakout yet. It's still a little early, but you are starting to break out of this consolidation angle, and you can see what's happening, okay? That's just understanding consolidation off of a big move up here, understanding the upper range is getting hit on the high side, and now a little bit of a breakout. We'll see if it holds, all right? A couple other odds and ends, folks, I want to touch on. Number one, Google. Let's look at Google. All right, as long as we have a little time left in this video, let's type in Google here. And we'll take a look at Google. Now, Google's a great chart on the daily, and I'm just going to touch on the daily here, because look at this move on Google. And hang on, that's research in motion. Let's bring up Google's chart. Now, just recently, Google was below 300. Look at this thing. Upwards of $370 now on Google, G-O-O-G. Huge move up. And one thing you want to note here is once they recapture these two moving averages, that's the key. All right, then you would have had a little resistance right in here, and you can see that resistance line. All right, why do you see that resistance? Well, you got to pause on it, then a gap up over it, and then a retrace back to that support line. That's always what you want to look for, that consolidation pullback to that breakout line, and then a buy program, and sure enough. But again, Google from going from basically under $300 now to $370 in a matter of a week or two, and this market's really had a monstrous move recently over the last couple days. Now, we're against some key levels that we're coming into on the daily charts, so this is going to get very interesting going into Monday, guys, and it's going to be one of the best nightly videos and stuff in the Research Center, so I do encourage you to subscribe to the Research Center. But just because of how much we've come up now in the last couple days, we're going into Geithner's speech on Monday. There's a lot of speculation on the stimulus package. There's so many avenues here, and we're going to have to really pay close attention to analyze these charts to see, are we going to pull back next week? We're going to rally more? Are we really breaking out here to the upside? What's going on? Alrighty, folks, enough said today. Again, join that webinar for a great, amazing, I can't stress the amazing technical analysis you'll learn in that webinar. I strongly encourage you to join up for this weekend's webinar. We'll talk to you soon. Take care.